with Ms. Ramos from BMO Harris Bank. She is talking with us today about understanding our credit score. So without further ado, Ms. Ramos, can you please start? Thank you.
Thank you. Hi, everyone. Happy New Year. I'm unable to share my screen. It says it's still disabled, Cassandra.
Hold on, I get you in 1 second.
Okay, thanks. Well, my name's Jahida. I'm with BMO Harris Bank, and today we are going to talk about credit scores, understanding your score, and credit reports. I'm going to turn off my camera just because it's easier to present. If you have any questions during the presentation, feel free to just unmute and ask your question. Sometimes it's hard for me to see while I'm doing the presentation. So go ahead and unmute yourself and ask a question.
All right, you should be good to go.
Thank you. And you should be able to see. So by the end of this workshop, you're going to be able to explore the importance of credit scores and reports, learn how to access information about credit scores and reports. We're going to discuss different strategies to build and improve credit and identify how you can protect your credit from fraud. So your credit can have a big impact on your financial life. Your credit report provides a snapshot of your financial habits and includes financial institutions, cell phone companies, credit card companies, other used to get a sense of your credit worthiness. Understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals. Okay. So to understand and see how well you know your credit score, who can answer? From those of you that are participating, how well do you know your credit score? Do you guys know it exactly, have an idea, don't know it, or don't know what a credit score is? Anyone care to share? B?
I say B, correct.
Rough idea? And I know some of you may use different monitoring systems, or I should say sites to monitor your credit score, which we'll talk about, and we'll share kind of the difference and how it varies. So yeah, a lot of us, for the most part, have an idea of where our score is at. So what is a credit score? So credit score is actually a 3-digit rating that tells a lender how likely you are to repay debt. Different lenders use different criteria to calculate it, but in general, the data is grouped into 5 categories, and they are payment history, amounts owed, length of credit history, new credit, and mix of credit. So poor credit is anything considered 579 or less. In reality, a lot of financial institutions really won't work with you if you're under 620. But according to this presentation, 570 or less is considered poor. 580 to 669 is fair. In this range, you might be having a hard time qualifying for loans. If you are able to get a loan, it's going to be a higher interest rate. With credit score between 670 and 739 is considered good. You may have some blemishes on your credit report, but you should be able to get an average interest rate on a loan or a credit card. Anything 740 to 799 is considered very good. So in this category, you're going to qualify for most loans. You probably have a solid credit history, and your credit history, with your credit history of 740, 799, you're going to be able to qualify for better rates and more loans. Anything over 800, so 800 to 850, 850 is the max credit score that you can have. It's considered exceptional. This credit score, anything over 800, with this credit score, you have the highest and strongest credit history, and you're going to qualify for the best terms and the best interest rates. Your credit score can be poor, fair, good, very good, or exceptional. What if you don't have a score at all? These are some strategies to build credit if you don't have a credit score. Many people, especially young people or people who have recently came into this country, have no credit history at all. It's not a bad thing. It's just not the same as having bad or poor credit. People without a credit history may have the same difficulties in getting loans as those with bad credit. There are many steps that you can take, again, to rebuild credit. The first thing you can do is open a line of credit. So this could be through a credit card company, like a retail credit card, or a bank. You can even try getting a small loan that you're able to repay on time in full. Some of these could be maybe secured credit cards. With secured credit cards, you may be restricted, and you might have to put leave a certain amount in order to get a credit card, but that's going to help you establish credit. You can also try to get a secured loan within BMO. We have what's called the Credit Builder Program, where we're able to help you build credit that way. Other financial institutions, again, can do secured credit cards to help you build credit. Another step you can do is request your payment history to be reported. Say you're renting or you're paying your utilities on time. You can request a utility company or your landlord to report your positive payment history to the credit bureaus. Remember, your landlord's not required to do this. The utility company may not be required to do so, but it's not, bad to ask and see if they'll do it for you to help start building credit that way. Third option is you can open a joint account. You can request a family member or friend with good credit history to help you co-sign on a loan or a credit card application. Just keep in mind, when you're doing a joint account, you're both owners of the account. So it can affect the person that's also co-signing for you, which we'll talk about shortly. That's one way to help. The next step is just to make sure you're paying your bills on time and in full, and you're never missing a payment. So regardless if you're renting, or let's say you're paying a utility company, whether they're reporting or not, if you're not paying your bills on time, it can start negatively impacting you because any late payments can take you to collections, and collections are reported on your credit report. So just make sure, regardless, you're paying your bills on time and paying in full. Another option is being an authorized user on an account. With an authorized user, you are not the owner of the credit card. For example, if we're taking a look at a credit card or a loan, or excuse me, a line of credit, you're just authorized to use that account. The owner is actually the person who's allowing you to have access to the credit card. With that, what it does is it helps you because it's reporting payments being made on time. It's now helping build your credit report. Should the owner of the credit card not make their payments on time, it can affect you negatively. But that's kind of what an authorized user, does. A lot of times, authorized user, usually you'll see parents do this for their kids when they turn 18, or maybe a spouse will do it for their spouse if they don't have credit and you guys are together getting married and someone's coming over without credit. That's usually when we see it. So now we're going to talk about Anna and Bella. This is an example of how credit score affects your daily life and ability to achieve financial goals. So let's take a look at Anna and Bella, who have been friends since middle school. They're both single, but have steady incomes to pay their bills. Anna and Bella decide to buy homes in their childhood neighborhood. Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. Why do you think this happened to Anna?
Her credit score is too low.
Right, her credit score is too low. What else? What else could affect it that her credit scores are low?
Unpaid bills.
Mm-hmm. Exactly. She could have paid her bills late, right? She's not making her payments on time. Even though she has steady income, she's not paying them on time, which has hurt her credit and have she's having a hard time getting a loan. So in this case, she's going to pay a higher rate than Bella for her home. So credit scores are not the only factor that lenders consider. They consider the market, your down payment, loan terms, and lenders have loan policies. These can influence the cost of a loan. Still, experts and researchers show that one's credit score has a large effect on the cost of the loan. So as you've seen, credit scores can affect your ability to get a loan, as well as your interest rates and insurance rates. They can also affect the eligibility for a rental home, as many homeowners and property managers check credit scores nowadays before renting to you. Your score can also have an impact on your life, like getting a car, getting a job these days. So depending on the type of job that you want, your credit score can also play an effect. When you're trying to set up utilities and phone service, having poor credit can be harder to set up an account with a utility company. You may have to leave a deposit. So essentially, any person or organization that you're seeking credit from may review your credit to ensure that they're lending to a responsible person. So much depends on a 3-digit score. Who actually comes up with the scoring system? Does anyone want to take a guess?
You said who comes up with the scoring?
Yeah. Mm-hmm.
I don't know who comes up with the scoring, but I do know, I don't know who comes up with the scoring, but what I do know is that it came about in the 80s, and it's funny because I just researched it, I think.
Yeah.
Oh, sorry about that.
Yeah, so the names are so there's 3 credit scoring companies, and you'll see them on your screen. So there's all different types of agencies that prepare credit scores, and they use different models to calculate them, but the most popular credit score is the FICO. And then the Experian, Equifax, and TransUnion are the 3 main credit bureaus used in the United States. They, along with lenders, use their version of FICO to, as their scoring model to get your credit score. The bureaus keep track of your credit history separately, so it's always a good idea to utilize each one. And we'll talk about, and I'll share with you where you can access your free credit report. But if there's ever any discrepancies amongst your credit report, you can get in touch with the credit bureau to figure out why. Credit scores also differ depending on the product you're applying for. So for example, mortgages, they may yield a different score for you than if you were applying for a credit card. Also, when you're applying for a mortgage, they're going to take the middle score of all 3 bureaus, whereas maybe you're applying for just a credit card, they might use just one credit bureau. So keep that in mind too if you're doing a joint, if you're going on a mortgage with and it's going to be joint, they're going to take the lowest middle score from the 2. So if it's husband and wife has the lowest middle score, they're going to use her score out of the 6, I should say 6 credit scores. They're going to take the middle of the lowest to give you your rate. So just keep that in mind too. So how do you think credit scores are calculated? Do you think it's the most important factor? Do you think it's in amounts owed, payment history, length of credit history, new credit, or types of credit? Which one do you think is the most important? You know, we talked about different credit bureaus, they're going to calculate your score differently. They're not going to disclose their exact method or formula that they use to calculate your score. But there is a most important factor that can affect your score. Anyone take a guess?
What did you say the most important factor? I would think it was the length.
You think it's the length? Okay.
I think it's the length.
Anyone
I
else?
think it's the length.
The length? Okay. It's actually your payment history and the amount of debt you owe are the two most important factors. So let's take a look at the factors and see what makes up your credit score. So for amounts owed, it's actually 30% of your credit score is factored by the amount that you owe. So it depends on how much money you owe on your credit card or loans. Owing money doesn't necessarily mean your risk to lenders. It's important to make sure that you're making your payments on time. And then the percentage of available credit is factors into the amounts owed. So typically that's when you hear people say, don't use more than 30% of your available balance. That's when we're talking about, because it ties into the amounts owed and it ties into your credit score. So maxing out your credit card can have a negative impact on your credit score. So 30% again of your credit score is determined by amounts owed. 35% of your credit score is based on payment history. This includes whether or not you're paying your bills on time. Do you always pay at least the minimum amount? If you do, then you're in good shape. Even if you make one late payment, it's likely to have a negative impact on your credit report. It will not show up on your credit report until it's more than 30 days late. So typically, let's use, for example, a mortgage. Your payment's due on the 1st. They give you a grace period up to the 15th to pay it. Let's say you make your mortgage payment on the 16th. The mortgage company is going to charge you a late fee. You're going to get a late notice. But if you pay it on the 16th, you're just going to get paid and have to pay the late fee. It's not going to be reported to the credit bureau that you were late. If you pay it on the 31st day, then it's going to be reported to the credit bureau that you made your mortgage payment late. So just keep that in mind. 35% of your payment history is accounted for your credit score. That's actually the highest. Length of credit history accounts for about 15% of your credit score. Credit history is affected by how long you've been managing credit. The longer your credit history, the more information the lender has about your repayment habits and reliability. People with a short credit history, even if it's steady and good, may be at a disadvantage because lenders may consider them to be higher risk because, again, they're newer to credit. So it's important to build and maintain a good credit history early. Also keep in mind, if you have a credit card that you have credit history for 5 years, and let's say that has a higher rate, you open up another credit card and it's 4 years later, your credit's good. Once you close that credit card that you opened 5 years ago, it no longer counts for you to have credit. So it takes it away and your length of credit history will not be a year. So just keep that in mind. If you already have established credit and you're not looking to apply for anything else, then it really doesn't matter if you're closing that first credit card you had. But while you're rebuilding, building credit and rebuilding credit, it's important to make sure you keep that in mind. Once you close, or let's say you have a loan, you're done paying off that loan, it no longer helps you with credit because the loan is paid. New credit. So new credit accounts for about 10% of your score. New credit or credit that you recently applied for accounts for a smaller part of your credit score. Each time you apply for new credit, the lender runs a check on your credit score and it can temporarily decrease your score. If you apply for too many things, it can signal that you might be using too much of your available credit. There are limited exceptions. Let's say you're applying for a mortgage and you're looking to buy a house. It may not affect you negatively because, again, lenders and creditors are able to see you're obviously car shopping, or excuse me, house shopping. Then there's types of credit. So 10% of your credit score is made up of types of credit. People with a mix of credit types like credit cards and loans and a mortgage may have a higher score than those with only one type. So just keep that in mind. Just because you have 5 credit cards, doesn't mean that a lender's gonna give it to you over someone that may have a car loan, a mortgage, and 1 credit card. They are probably more balanced because they have different types than that person with the 5 credit cards. Because again, 5 credit cards, they're just revolving. You're only required to make minimum small payments. With someone with a mixed balance, they're making, if it's a loan, they're making principal and interest payments. So lenders able to see, that they're able to make higher purchases. Any questions? Okay. So the cost of co-signing, earlier we talked about, right? We talked about building credit and being a co-signer. These are just some costs of co-signing. So again, we're looking at Anna and Bella. So Anna just bought her new house, but is further away from work than her old apartment was. She needs a new way to get to work. She'd like to purchase a new car. She's taken some steps to improve her credit and is now eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs a co-signer. So she decides to ask Bella for help. Should Bella help her? You guys think Bella should
No.
help her? No, why not?
Because co-signing is a bad thing to do.
Why? Why is co-signing a bad thing to do?
Because when you co-sign, if the person fails to pay that bill, then it's gonna come back on the person that co-signed, and it can mess up their credit.
Correct. A lot of people think co-signing on a loan is helpful, right? Especially if they're your kid, it's a parent, close friend. But just keep in mind, like Cassandra said, if in this case, Anna fails to pay, then Bella is now responsible for the payments and making sure she's paying on time so that she's not negatively impacted. So that's the cost of co-signing. Yes, you are helping out a person, but just keep in mind when you're co-signing, you're saying you're also taking responsibility for that item. Should that person not be able to pay, you're now responsible for making those payments. So let's talk about credit report. So applying for credit on your own or with someone else can affect your credit score, like we just said. Again, the only difference when we're adding an authorized user, just keep in mind that the difference from co-signing, when you're adding an authorized user, the card holder is responsible for paying the bills. The authorized user just has access to use that credit card. That's one way to help build credit too, but again, if if they have access to use those funds. So how are credit reports? Are they different? Are they different from credit scores? Well, your credit report, it's a snapshot of your credit profile, including your history. Every time you take out a loan or apply for a credit card, it's going to appear on your credit report. It's very important to review your credit report regularly. It's one of the tools to build and maintain good credit. The three nationwide, so the three credit bureaus, Experian, Equifax, and TransUnion, you're able to access your credit for free from those agencies once a year. And again, every time you check your credit report and you're checking your credit, it's not affecting you. And so that's one thing people always think, if they're checking their credit, that if they're going to be impacted, their credit score is going to be impacted. That's not true. You can check it as many times as you want, and it's not going to help. It's not going to hurt your credit. What it can do, keeping track of your credit report can help you. It can help you detect fraud. It can help you see where your credit is at and help you get a better score. So you can either go to annualcreditreport.com or utilize the phone number to get a copy of your credit report for free. You will have to pay if you want your credit score, but you are and do have access to your credit report for free. One thing we always recommend is spacing out, and maybe every 4 months checking your credit from one of the credit bureaus. If you do it all at once, a majority of the time you're going to see pretty much the same thing on each credit report. Again, you know, if it varies, it's just going to be slightly. That's why we just say and recommend it's a good idea to do every 4 months, just to get it, you know, an idea of where your credit's at, what's showing up on your credit report. You do have access to an additional free credit report if you've reported fraud, if you need to apply for welfare, or if you you've been denied a loan or credit application. If also you're on unemployment and you plan to look for a job within 60 days, you have access to get a copy of your credit report for free. So getting your credit score. So again, you can get your credit score from the 3 credit bureaus. Just keep in mind, again, there's a fee to do that. Getting your credit score from these credit bureaus are actually going to give you an idea of what your credit score is at. So if you go to TransUnion and you pay to get your credit score, you're going to see what TransUnion says you get your credit score. When you're looking at like Credit Karma, or if you're looking at, for example, your FICO score from Discover, it's just an idea because they're using a different scoring model to kind of calculate where your score may be. Credit Karma, what that's good for is it's great to see what you have, so you're able to see if there's fraud. But again, their scoring model, we've seen that it's even varied 50 points. So just because it says you're at 700 doesn't really mean you're at 700. So just keep that in mind. But it's a great idea to see and help spot fraud. So once you've received your free credit report, how do you make sense of it? So on your credit report, there's 4 major sections in it. The first is the personal information. It's going to contain your name, birth date, social address, as well as the name of your spouse and your employer. You're going to have public records. This section contains information such as bankruptcy, judgment, any delinquent or unpaid taxes. And then you have your credit accounts. So your credit accounts will show information about your debts and whether or not you've been paying your bills on time, how long it's been opened, and the risk for delinquency. It'll have information about your open and closed accounts. And then there's your credit inquiries. This section includes information about organizations, people, or agencies that have requested within the last 2 years to have seen your credit report. Some information that's not included on your credit report is your medical information, information about your race, your sex, religion. Your checking and your savings accounts aren't on there. Any debit or prepaid cards, any private loans that you receive from benefactors, family, or friends, you're not going to see that on your credit report. If you do, however, have a checking account that gets overdrawn and it gets closed out, it will go to collections and then you will see it on your credit report. Requesting and reviewing the information on your credit report is the first step towards maintaining and building healthy credit. What are some important things to look out for? Let's find out. So when you're looking at your credit report, review the dates of your accounts and the accounts, what the dates that they were opened. Remember, the length of your credit history accounts for 10% of your credit score. So make sure that the opening and closing dates are correctly. Date of delinquencies. So review delinquent loans if you have any and check that the dates are accurate and less than 7 years old. Dates of public records. Any public records of legal activity should be erased from your score after 7 years or 10 years for bankruptcies. And then the dates of your credit request. Whenever a lender or an institution, employer, homeowner requests your credit report, you're going to be see that on there. So just make sure it's not on there after 2 years. If you notice any errors, you can dispute the errors with the credit bureaus. And these are just some ways what to do if you needed to dispute items on your credit report. So you can write a letter to the credit reporting agency, let them know what items you think are inaccurate. When writing your letter, make copies of all the documentation you have to support it. The letter should include your name, address, copies of all items in question, and then a copy of your credit report with the items in question circled. Send your letter by certified mail. Send a letter to the, send an additional letter to the provider. Or if you're going online and you're disputing online, you can just dispute and submit your information there. That's probably the easiest way. And then just keep in mind that they have 90 days to come up with, when you dispute an item, it goes to the provider, the provider is obligated to respond to you within 30 days. If not, it usually falls off of your credit report.
Hey, quick comment. I know when I downloaded the Credit Karma app, and I know it's one that's called Credit Sesame, I think it is, or Sesame, whatever. But I know their credit score sometimes is a little off. I think their numbers may be about 20 or 30 points off. But on there, if you click on the credit bureau, you can dispute online through one of the apps one of the items on your account that you are not feeling comfortable with or you feel is inaccurate. But those are actually legitimate sites or apps that I use, and I've had good response with it.
Yeah, so those, like I mentioned earlier, those are good sites to view your credit. Again, the points are going to vary, but it's a great site to see like where your credit's at for the most part and the items that you have on your credit. So like, you know, your opened accounts, your closed accounts, your collections, if you have any delinquencies, you know, where you've lived. That's great information that's shared on there. So you're able to see. It's great to help, you know, if you're a victim of fraud, you're able to kind of see. The one thing it's not great for is, again, your credit score. It's just giving you an idea of where your credit score is. It's not necessarily that's where your credit score's at. But it is great to see other things, and it's free too.
I have something if Cassandra's finished.
Sure.
Okay. Okay, well, two things.
Yeah.
And I'm not sure if you talked about this or not. I had just hopped back on again. Can you dispute your student loans to get your student? I know you still you owe it, but can you get your student loans removed from your credit report? That's the first question.
Your student loans are the only thing that you will not be able to come off of your credit. Even if you file bankruptcy, your student loans are the only thing that you have to pay back.
Okay. So there's not a way where, because I heard somebody saying that you could get your student loans removed off of your credit reports, and of course you still owe them, but for them to show up on your report, you could get that removed. So you're saying you cannot get the student loan?
I haven't heard. I'm sure there's tricks and stuff that that people say that can get removed, but I'm not sure what company you can do. I'm sure if you try to dispute it through the three sides, they're going to end up probably finding proof. I mean, again, any company that you dispute, they have 30 days. If not, it falls off of your credit report, but it also can come back on. So let's say, we've seen things where someone's disputed and then it ends up showing back up on your credit report on a future date. That's probably most likely because the provider has proof now that you do have that debt. I haven't seen that anyone's had their student loan come off, but again, I'm sure other people have, because there's tricks and stuff that people.
Right, because right. Okay, and second, go ahead. No, go ahead.
No, go ahead.
And then second, I know Cassandra was talking about Credit Karma, and I use Credit Karma myself, and I love it, and it helps me out a lot. It helps me learn, different things and stuff like that. Now I have a Discovered credit card, and I've noticed on the Discovered credit card, it gives me my FICO score. Is that a correct number on my Discover card?
No, it's just gonna be an idea. So every Credit Karma, your Discover, your Chase credit cards, your BMO credit cards, every company is gonna have their own scoring model that they use. The TransUnion, Equifax, and Experian, they're never gonna share what their scoring model is. But they just calculating an idea based on the information from your credit report. This is what your credit score could be. It can vary. It can vary. We've seen certain ones vary 10 points, 50 points, but it's just giving you an idea. I mean, the main thing is to see, are your payments being on time? If you're paying your payments on time, you've had credit for a while, you're not overextending your credit, then you should be okay.
Okay. Yeah.
Your let's say, for example, Discover's never going to say, oh, your score's 750, and then really it's at 600. I mean, it's really not, but it could be 740. You're new to credit. Like my daughter, she's new to credit. She already has a credit score of, I think she's 760 through Discover. But again, that's the only card that she has. She's had it so she's still fairly new to credit too. So just keep that in mind also when you're thinking of credit score. We talked about it earlier. Credit score is a factor. Lenders are also going to look at everything else. So again, if you only have credit cards and you're looking for something else, and your credit score is determined by just your credit cards, there's so many other factors that tie into it. But having a good score, the most important thing is just paying your bills on time, and paying them regularly, at least the minimum payment. That's what's going to help.
Okay, so overall, it's just kind of giving you, it's
just an idea.
It's just idea. Okay, then I'm happy with the ideal.
Yeah. I mean,
Okay.
look at it this way. If you're using Credit Karma and you're using Discover, whatever, and you see a good score and you don't have delinquencies and, and you're paying your bills on time, then you're pretty much, good.
Okay.
So let's say you had some issues. There's ways that you can repair your credit. Again, monitor your credit reports and credit scores. We talked about using free sites like your Credit Sesame, your Credit Karma, your credit card companies. Again, pay your bills on time and regularly. If you need to, there's credit counseling, or you can consider other financial products. Maybe you need to consolidate and get a loan to pay off your credit cards. So these are some steps that you can do to repair credit. The Credit Repair Organizations Act was established to protect your rights as a consumer. It prevents credit repair organizations from engaging in false advertising and deceptive practices. In other words, credit repair organizations may not overpromise, for example, to delete all bad credit, regardless of whether it's legitimate debt. They also cannot demand advance payment. They need to put their contracts in writing, and then they have to offer consumers cancellation rights. Any questions on that? Okay, in the next section, we're going to talk about potential scams and how to identify potential scams from credit repair companies. So here again, Anna, she wanted to improve her credit. She researched several credit repair companies. The first company was to promise to remove her bad credit from her report. All she has to do is pay an upfront fee. She's worried about her debts, but the company assures her that she can get rid of it. They can scrub it and remove all the negative information from her report. The company also tells Anna not to contact the credit bureaus directly, since doing so is going to negatively affect the company's efforts. Do you think that is correct?
No.
No. What are some of the red flags that you saw and noticed?
When they said do not report to the credit bureau.
Right? Do not report. What else did they say that they're able to do?
They promised to remove bad credit. You shouldn't promise anybody.
Right. So she shouldn't trust them because, again, they promised to remove her bad credit and they asked for an upfront fee. They told her don't reach out. So according to the Federal Credit Repair Organization Act, credit repair companies must successfully remove the credit inaccuracies from an individual's report and provide proof that the report has been changed before they can request payment for services. This can take up to 6 months. So that's a big red flag. Paying upfront fees, again, never do that. There's no promises that someone, you'll hear people also say, well, I can get you to a 750, that's not true either. There's no way someone can determine what credit's going. Maybe they can improve your credit and get you, to have good credit, but they can't promise you a certain credit score. So Anna should not trust them. It's a big red flag. So to recap, there's many red flags you can spot in a credit repair scam. Upfront fees, promising to remove negative information, offering to scrub or alter legitimate credit information, and instructing you not to contact the bureau directly is huge red flags. Also asking for a signature on blank paperwork. Never sign something that you're not, able to read. Credit profile number scams. So they promise a new credit identity by issuing a credit profile number. Also, you see fake social security number scams. So any agency that encourages you to use a fake social security number is a big red flag. Credit repair companies can help you spot and remove incorrect or fraudulent information on your credit reports. Credit counseling agencies can help you improve your credit. Just make sure that you're doing your research and you're finding a great organization to be able to help you. If your credit report is poor, you may be considered, taking advantage of credit counseling services. Many agencies offer free initial sessions. These are just some credit agencies that you can reach out to: the National Foundation for Credit Counseling and the National Financial Coaching Association of America. These agencies can help you create a financial plan to help decrease your debts. So what other steps can you take to improve your credit? So we covered a lot of things that could potentially affect your credit. The good news is a few good habits and strategies around managing your credit and debt can go a long way towards helping you keep a good high credit score. Here are some basic strategies. So again, using less than 30% of your available credit. Remember, that makes up 30% of your credit score. Do not max out your credit cards. Pay your bills on time. Payment history makes up 35% of your credit score. Pay off your credit cards in full if you can each month. Pay off your loans on time. Don't apply for multiple loans and credit cards at the same time. And make a financial plan or a debt management plan to reduce debt. I believe, I'm not sure if next month or maybe the following month, we're going to talk about debt management, and we'll come up with and talk different strategies to help reduce debt. It's important to create and follow a monthly budget and then review your credit report for accuracy.
I have a quick question. real quick.
Yeah, then I have a question too. So go ahead, Micah.
Okay, yeah, this is real quick. I've been seeing lately how, and I wound up getting it in the mail on how they will give you a loan. There's companies out here that will give you a loan to pay off your credit card debt. I received something in the mail a couple times. I just now saw something on Facebook earlier this morning about that, which I'm kind of leery on Facebook or whatnot, but I had a piece of paper saying that, get a loan, we will pay off all your credit card, bills. And then of course, I guess you just pay back that particular loan that you get. Is that legit, or how do you?
I mean, you can get a loan to pay off your credit card debt. You just always have to take a look at, again, what are the factors? So if you're giving me, for example, a $10,000 loan to pay off my credit cards, what's my rate going to be? If it's a high rate, and what are the terms going to be? Are there additional fees for taking out this loan? And then you just have to factor in, okay, I owe X amount. It's going to take me X amount of time to pay off these bills. Is it worth me getting a loan or not? I think it all just depends on the terms, the rate, and the additional cost. Because there are methods for you to pay off your credit cards sooner, or not sooner, but if you have multiple credit cards that you're paying, there's different methods that you can do. The most important thing is paying off the highest rate first. That's what's going to save you money over time, and then just making minimum payments on your other ones. But again, there are legit companies where you can get loans. It's just going to determine, you need to find out what's the rate and what the fees are.
Gotcha. Thank you.
You're welcome. If you have a home and you have equity in your home, that's probably the best way to go. No, it's no longer a tax write-off, but the rates are lower, and you're going to be able to pay off your loan sooner.
Okay.
Yaida, this is
Yes.
Cassandra again. Two things.
Mhm.
One, do you all offer a budget planning class or spreadsheet or something that we can possibly get set up for a top
We do
flight?
have we do have a budget workshop. We have budget workshop. We have two: one is budgeting and one is maintaining your budget. And then they'll talk about each talks about the importance of making sure like you're creating a budget plan every month, and it's like you're budgeting, right? What's your income? What are your expenses? And then what's left over should go to your savings or your debt. And we do have different tools that you can use.
Well, you and I will talk offline about getting that workshop, because I actually have our financial initiative coordinator. She's on here as well. And I want to pipe her in the line with us when we talk about getting that workshop set up, because I will either want to try to do it face to face or virtually, or see if we can combine it. But let's talk offline about that. And then secondly, your next class, because this class, unfortunately, December was one of those months where things just was vacation and everything. But your next class is actually on January 17th. If you want to change it, we can change it. If not, we can keep it. But it's protect your identity.
Oh yeah, identity theft is a good one. So we're going to talk about how your personal information, how your biometric information, medical information, how just different, it's more than just taking your account information and taking your credit card information.
So we are still on then for January 17th?
Yes.
Okay, all right. So moving right along. Okay, go ahead to your summary. I just want to make sure.
Sure. So today we talked about the importance of credit score and reports, how to access your information, how to identify different strategies to help improve your credit, and then how to protect your credit from incorrect claims and frauds. Any questions? And then at the end, I just tab if anyone wants to take advantage of an offer that we have. I talk about this at the end after every workshop. If you don't already bank with BMO and you're looking to make a change or in need of a bank, we have an offer that you can take advantage of for checking and for savings. And then there's the QR code you can scan to open up your account. You have 60 days to fund it. But
I don't see any questions. I don't see any questions here on Facebook, and I don't see any in the chat.
I have a quick question for you.
Yeah.
Do you handle auto refinance?
I personally don't, but we do. So if you're interested, and you said you're in the Milwaukee area?
Yes.
I can connect you. If you want to take my information below and either send me an email or reach out to me, let me know where what branch is closest to you, and I can have someone reach out to you from that area.
Okay, that's fine too.
Any other questions for me? Well,
yes, I will, Dawn.
Well, thank you guys for joining the call, and stay tuned for our next workshop on identity theft. Have a good evening.
Okay, so let me thank our FaceTime viewers for chiming in on our monthly session with Ms. Ramos on banking, any and everything banking. We change it up every single month. And we have her until the end of the year. And who knows, she may come back again next year. But we do have some classes that we're going to talk about that's going to come up on budgeting. We're going to have a budgeting workshop as well as a small business workshop. So stay tuned on Top Flight, and you'll see all of that stuff. So I'm going to say bye on Facebook, and then hold on 1 second. Let me close this out.